we are entering one of the most perilous moments for the stock market since COVID-19 burst on the scene. Oh, we had the huge sell-off, right, down 35% from the highs. Then the giant bounce back this week, up 19.9% going into today. And then a real pasting, most of it at the end of the day, with the Dow ultimately slipping 915 points, S&P declining 3.37%, NASDAQ falling 3.79%. Again, just like yesterday, which had the big whoosh up, this had the whoosh down at the end of the day. I hate that stuff. Now, we need to figure out what's next. Either a continuation of today's sell-off evolving into what we call a retest, where the market goes back to its earlier lows, or maybe, or it could even take them out, or a resting period, setting us up for the next move higher. There's not much in between here. What makes the situation so dicey? Simple. Next Friday, we get the Labor Department's big non-farm payroll report. And I've got to tell you, that based on this week's just absolutely hideous jobless claims number, we could expect a real doozy. See, this market's become a tug of war between the bears bracing for a possible depression if we can't stop COVID. Yes, that's how horrible I expected the summer to be on Friday. And the bulls betting on an absolute boom if we do beat it because of all the liquidity being injected into the system by both the Federal Reserve and, of course, by this $2 trillion bill that was signed this afternoon. Now, I don't know who's going to be right, but lately I'm a tad more optimistic. And, you know, I've been negative ever since the Super Bowl. We just got through a monumental week. Congress passing that massive $2.2 trillion stimulus package in record time. I mean, I can't believe they got it through so quickly. There's a lot of money in there to help companies make payroll. So hopefully executives will think twice before they lay anyone off. Money's on the way to individuals, too. It should be just there in 3 weeks if we can hold on. This is a messy bill, though, with lots of moving parts. But there's tons of money here for small and medium-sized businesses that desperately need it. Remember, that's 85% of our economy and our service-based economy as it is. There's a lot for the newly unemployed. This was a go big or go home moment. And fortunately, Congress decided to go big. Plus, the Federal Reserve made it clear that they've got more bullets in the chamber if any more arcane pipes in the financial plumbing get clogged. Another big positive. Without the rescue package, we were at the real risk of falling into a depression, and it might have been bad enough to rival the great one. This time around, you have government-mandated store closures, and frankly, wherever those mandates have been ignored, well, it's been disastrous as it allows the disease to spread so much faster. I think the stimulus takes a depression, though, off the table. Yes, that was the right thing to do. But there are still a lot of problems. Problems that aren't solved by the bill. But according to the New York Times, we have medical equipment shortages in 200 cities. We're going to talk about the shortages later in the show. That means more illness and more death. We desperately need more ventilators, and for some reason, the government's not been able to figure out how to expand manufacturing of them. Meanwhile, the lack of a firm federally mandated shutdown, so piecemeal, has allowed the virus to spread throughout the country. Every big city that hasn't locked itself down could look like New York in a couple of weeks. So I'm very skeptical that we'll be able to open for business again on April 12th, the president's makeshift deadline. Without national rules to contain this thing and test people aggressively, test, we're going to have a lot of trouble bending this curve, and that's what makes the moment so dicey. However, there's one hope that I think deserves more attention than it's getting. If somebody can come up with a drug that gets COVID-19 patients in and out of the hospital much faster and off the respirators, it could really ease the strain on our beleaguered healthcare system. I know it sounds too good to be true, but there are so many coronavirus drug trials going on right now that it's hard to keep up. We have Sanofi on tonight. That's that giant French pharmaceutical company. I'm very encouraged about the drug that they're testing with Regeneron, which you know is a company we like very much. Not only could it stop the deadliest symptoms of the disease, it could even perhaps prevent people from getting infected. And that is if it really works. You think the market's ready for that? If we can get rapid testing up over, and over, I keep stress testing since it started, coupled with some sort of inoculation, well, that's the whole ballgame. With a drug that good, we beat the pandemic and trigger one of the biggest rallies in stock market history. But if we fail, I think the market will revisit its lows from earlier this week. That's why we need to stay in touch with actual earnings, with actual companies, so we see what's worth buying just in case things even go bad, but certainly would do well if things go good.
Don't miss a second of Mad Money. Follow @Jim on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.